third video in this short series. Previously we discussed why it's my firm belief that property invested in the way we do is the best long-term wealth creation strategy on planet Earth. In previous videos I covered the fact that property rising in value brings in a rental income and is stable enough to leverage. But there's loads more to learn, and next I promise to tell you how we work inside our property business, allowing us to buy more properties with a single limited capital pot to speed things up. There's nothing I can do to help you get that capital pot to start off with, but I can help that capital pot go further. People ask me how much capital they need and how long it will take to grow their empire. The answer is always the same: as much as you can, and then it will go faster. So the simple answer is get as much as you can and start as soon as you can. If you want to do this on a shoestring, you can, but it'll feel much more like a job to start off with. I've seen people get started with as little as £20,000, really graft to get it off the ground. If that's you, my company offers something we call Academy. That might be something you want to look at. It really works. So if you want to sit back and let other people do the heavy lifting, more realistically, you're going to need closer to 6 figures. Incidentally, I did it the hard way, so I know it's possible. If you've already got a capital pot, chances are you've earned it somehow. You're probably better sticking doing that and getting somebody else to build your property empire for you. My business can, Full Landlords can do it all for you. Very roughly, we charge the equivalent of about £40 an hour. Most people think that's worth it, considering the opportunity cost and the potential downside risk of doing it yourself. It's a fixed price. How do we speed things up? The next 3 things I'm going to show you, they take property investment off the charts. I describe them as magic. 1, always buy cheap. 2, always add value. 3, if you do 1 and 2, you create a margin, equity, release that equity and use that to grow your property empire. It can take me a while to fully explain this, all the nuances. It's what we cover in a Discovery Day, but here's a simple explanation that might help. You have seen a builder do this already, a builder. They buy a house cheap, they fix it up, they sell it for a profit. You know it's possible, you've seen it happen, the flip. There are some significant downsides to doing this to earn money. First of all, it's a job. The builder is not investing for the future. Once they've sold the house, they need to pay tax, they need to find another project, and then they need to do it all over again. It's okay, but it's work, and I'm guessing you know all about work already. However, the concept, if you take this concept, buy a cheap house, do it up, but instead of selling it, you keep it. You rent it out, using the profit that you'd have got if you'd have sold it as your down payment on a mortgage. How's that possible? Let's go on a bit of a tangent here and explain something. First, I'm not a mortgage broker. We can put you in touch with a mortgage broker, but I'm not a mortgage broker. I've got enough mortgages of my own to be able to tell you that the process is called a remortgage. It's very simple, it's very straightforward, it's very normal. Also, it's worth pointing out at this time, you can have as many buy-to-let mortgages as you want. Some lenders will limit you, but there's no overall limit. The loan is not based on you, it's based on the property, how it stacks, the ratio or the yield between what it's worth, what the loan is and what the rent comes in. It can be complicated to explain, too long for this video. I can explain it more fully if we get to meet. It can work beautifully or it can be a nightmare. So let's say you get it right, you bought a cheap house, you fixed it up right, so it was worth more, but instead of selling it, you use what would have been profit as the deposit on a mortgage so you can keep the property. Just run through that in your head, have a think about what you've just done. Contrast it with the experience that builder had. First, the builder has to find a large, nice property. It's harder to find. There's a tricky to execute premium renovation. He's got to find a willing buyer that's going to pay his price, can tie up cash for a long time. There's hard work, risk and uncertainty written all over that transaction. Contrast that with what you did. You bought it in easy, cheap, easy to find. The house was cheaper, there was less renovation, you didn't have to wait long till the buyer came along. You simply called up the bank and asked them to come around and do a property evaluation and give you your money. It's really, really cool. You just worked inside your property investment vehicle. You put that money straight onto your balance sheet. Normally, the builder had to work, pay tax and then invest. You invested straight on your balance sheet. You still own the house, it'll go up in value over years. That'll make you a millionaire over time if you get enough of them. You rent the property out and every month that property will pay you an income and some profit for you to either to spend or more likely at this early stage to reinvest back in your property portfolio. Just quickly, a little bit of a digression again, but remember those shares we talked about in the last video? Not really an option now because you can't leverage, but you cannot buy shares for a single fraction of a penny than they're worth, and you can't add value either. Property is truly something special. Anyway, the main point, have you twigged it yet? Some will, some won't, don't worry. took me about three weeks to get it when I first heard this, for the penny to drop. Let's run through this again so you really get it. Put some numbers to the example. It's impossible to do properly in this video. Please be aware, I have made these numbers far too simple. They are not real life, it's an example. I chose them because they add up to 100. It's easy for percentages, so it's illustrative only. But let's imagine you've got £100,000 in the bank. You buy a cheap property for £70,000 and you spend £15,000 on the property in order to add value. The total cost now is to use £85,000. That's the cost of the property and the work. Your bank account's got £15,000 left in it. The house you've only spent £85,000 on it is now worth £100,000 because you've finished the work, it's done. So your clever work and effort have created a profit, a margin, whatever you want to call it, of £15,000. At the moment you own that house in cash, but you send the bank round to value it for a mortgage. The bank agrees with you, it's worth £100,000 as you thought. They often loan you 70% of the loan, so meaning they give you £70,000. Add that £70,000 to 15 that was already in the bank, that's 85. You started this example with 100,000 in the bank, you've now got £85,000 in the bank. However, you own a house, it's going up in value. You get to keep the rent, in this case it'll be £500–600 a month, and an operating profit as well. More importantly, you've got £80,000 of equity in the property. Your hard work and effort has been accepted by the bank as 30% deposit, that £30,000 equity, the £85,000 cash that's in the bank, it's £115,000. You already started with £100,000. If you bought the house next door, it wasn't cheap, you couldn't add value, you'd have had to pay £100,000 for it, you know that. That would have taken a £30,000 deposit. You've already put a £15,000 deposit in. Did you get that? Do you think the £85,000 that's still left is enough to buy another house? The answer is yes. Particularly if you can add rental property back in, or income from a job or bonus. Do whatever it takes to get this off the ground in the first instance. If that is not the most exciting thing you have ever learned, stacked on top of all the other things you've learned, you haven't understood it. Rewind, grab a pen, go over it again. The moment I fully understood this, I was all in and I've never looked back since. So shall we recap? Work hard, save and invest in an asset-backed business where the assets go in value, bring in an income, are reliable and stable enough to allow you to leverage safely and still make a monthly income covering the operating expenses. Plus a buffer to include some profit as well. That puts property in a class of 1, it's your only choice. But don't just buy any property, buy a cheap one, add value, then remortgage at a safe level, leaving your hard work in the property as the equity that the bank requires the deposit, pulling most of your capital back out into the bank so you can buy again and buy more properties. Build your empire. Wrap that all up with some good financial advice, accountancy, tax planning, whatever it is. What's more, because of all your choices, you won't need to work long hours and work hard to earn that money. It will come automatically. You will have the ultimate lifestyle business. It's easy, eh? Yes and no. It really is that simple. I have done it. I've done it for other people. Tens of thousands of other landlords have done it too. However, millions of landlords have tried and failed. Most landlords do not achieve this. Most landlords fail. They buy a few properties, they stop because they either run out of money or they find it too much hard work. They get lots of management hassle or all of the above. They either haven't bought enough to make a difference or they've bought so many that they've got a nightmare portfolio because they haven't looked after things right. We regularly buy property from landlords who haven't made this work. The answer is to buy the right house, the right area, the right renovation, the right tenant, put them in with the right paperwork, do the right management. I'm running out of fingers. You'll need to learn all this yourself or you'll need to delegate it to somebody else. If you want to learn it yourself, stay tuned in. Every week we vlog content about the life and business of being a landlord. You could learn a lot. Or book yourself onto one of our Academy Day courses. Very useful too. If this just sounds like it's all too much hassle for you, we can do it for you, certainly the heavy lifting. Come and see us, book a discovery day, there'll be a link here. And we can build your property empire for you. This is the end of the video. There's a bonus video coming up. I'll send you in the next few days. But for now, it's goodbye.